This is the briefing for Tuesday, May 17th. We had a very interesting day in the stock indices today. And before I get into that, I want to talk for a few minutes about really this strategy that I use in analyzing the markets. Most of you understand that it really involves just two things: price development. In other words, what is the trend in a specific degree of time, and then price structure, which is basically the strength or weakness of that trend, especially as it approaches key reference areas, or what we refer to most of the time as support and resistance. So basically, looking at it in multiple time frames, we have to understand that in some time frames a move is a counter trend rotation, and in another time it is a trend. And you can see that basically from trading going all the way back to May 12th, that this is an uptrend. So basically that has to be respected. So price development has to be respected. And if I had to weight them, I would say that price development probably is 60% of the analysis, and price structure is probably about 40% of the analysis, mainly because we have to respect the trend in the degree of time frame that we're analyzing. Now, speaking of time frames, if you look at this as a trend, this is a 30-minute chart. You could look at it on a 5 or 15-minute chart, 30-minute chart also. But if we look at it on a daily basis, this is a counter trend rotation. At least that's what it appears to be at this point in time. Now, that can change. But going back to where we are now, so looking at what happened in today's trading, we know from the previous briefings and analysis that I've done that 395 in the spiders was a key resistance area. Above that was 405 in the spiders, and then above that is going to be the 415 area. Now, today we breached through the 405 area, but then it appeared that we were going to retrace back through it again. And we did that a second time right at this candle right here, and you can see that it traded right down to 405 through it, and then the next candle was completely retraced of the selling candle, and then we closed at the high of the day, appearing that we're going to extend the gains in tomorrow's trading. Now, two things are conflicting with this. The first, I should say three things. The first one is the fact that we had market breadth that was very strong in today's trading. I mean, there's no getting around about it, but this was a very strong trend in terms of market breadth, so it was well participated in. The problem with this move was that volume has been declining all through this rally. So this trend on a 30-minute basis, I'm going to call it 30-minute trend because I'm using a 30-minute chart, but this trend on a 30-minute basis that appears on a daily chart to be a counter trend rotation is basically confirmed by the fact that volume is continuing to fall off. Now you can see that pretty clearly in the NASDAQ. So volume is falling off. So the first thing we have is we have very strong breadth, which is supporting the move. Same thing with NASDAQ breadth, it's supporting the move, but we have declining volume. And that declining volume, now this is volume in the spiders, and this is volume in the Qs, as irrespective of the fact that it is not total volume for the NYSE and total volume for the NASDAQ, which I'll get to in a few minutes. So this basically gives us a warning flag. The second warning flag that we have is the fact that the Qs, or the NASDAQ, is just really at this 305, 306 level, really hasn't traded through it like the spiders have, which gives us an intermarket divergence, which makes part of this rally at least a little bit suspect, along with the volume. And you can see volume in the Qs fell off, and fell off pretty dramatically today as well. It has been falling off for the last several days. So what happens from here? Well, the fact that we are basically at resistance now, the spiders have traded up to 408.25 at the close today, but this does appear to be an area of rotation with a slight breakout of the upper extreme, which would come in right around about the 407.5 area, as you can see right there. Same thing in the NASDAQ. You can see the rotation right through here with the upper extreme right around 305, 306 with a little bit of extension higher. So what happens tomorrow is going to be extremely important. Now, a couple of other things. We have to respect the trend, and the trend is certainly up, and we have traded and closed above resistance, which now makes it support. So those two areas are extremely important, 405 in the spiders and about the 305 down to, or 306 down to 305 area in the Qs. So that's important. Next upside resistance is 415 and 315 in the Qs. Now, certainly if you're trading this, we certainly want to look to be long as we trade above today's high and hold above today's high. Any type of retracement back through today's high would suggest then a test of support at 405 and 305 in the Qs. And then, of course, if that's tested, it would open up the possibility of trading back through the range once again. So looking at the longer term perspective, you can see that 410, 415 is the next upside longer term of resistance. You can see the trend in volume is down, but the trend in market breadth is up, and that has to be respected. Net volume, this is net volume on the NYSE is positive. It was strong in today's trading and has been strong. But keep in mind that we have very low volume, but net volume was positive. What volume we did have was positive. Same thing in the NASDAQ. You can see the NASDAQ isn't even anywhere close from approaching this 320 level yet, whereas the spiders are not far away from, a few points away from it after today's close as well. Looking at the Russell, you can see the Russell is lagging somewhat, although short term in today's trading, the Russell certainly seemed to be winning the day and leading the other indices higher. We still have a series of lower highs and lower lows. So that has not been violated. So looking at this on a daily time frame, this trend is still intact. So keeping in mind that in the short term, the trend is up. In the longer term, this appears to be a counter trend rotation. And one of the characteristics is the fact that it occurs on extremely low volume. And that's exactly what's happening in today's trading. Looking at where we are in terms of total volume, you can see total volume falling off pretty dramatically in the NYSE and a real dramatic loss in the NASDAQ. So volume is certainly not supporting this move. What this basically tells us is that there are traders who are buying this move at this point in time, but the big money is not piling in, not yet. And I want to see some verification from the big money that they are beginning to step back in and buy this market before I put my money with the weaker money, which appears to be what was driving this trend in today's trading. Now, looking at where we are in terms of overbought and oversold, you can see that we are at a point once again of being overbought in both the NASDAQ and in the NYSE. So while this does not preclude us from trading higher tomorrow, it does suggest that along with the fact that volume is falling off, that we may see some type of a pause in tomorrow's trading. Now, keep in mind, we closed at the high of the day, and that suggests there would have been follow through if the market hadn't closed. So there could be additional follow through in tomorrow's trading. Key to that is going to be watching what happens with breadth. You can see it was fairly strong today. So if there's if there's weaker breadth on higher prices at the open tomorrow, that's going to be a clear signal that you'll probably see retracement back through today's high and then a potential test of what is now short-term support. Once again, 405 in the spiders and about 305 in the Qs. Barring that, if volume begins to increase and we start to see more volume, more traders coming in, more money coming into the indices, that will push us up to the 415 level and 315 level. Corresponding into the NASDAQ. And then from there, it's just going to be anybody's guess as to what happens. Trading above those levels would be a significant event, because that would then put in jeopardy the fact that this is a downtrend with a run, pause, run, pause, run, pause, potentially another run. So what happens in the next day, 2 days, is going to be very, very important and very, very interesting to see. Have a great night. I'll pick this back up again tomorrow.